Good afternoon. Here is the strange thing that happened this week. The single most important company in the artificial intelligence supply chain, Taiwan Semiconductor, posted a record quarter and raised its guidance for the whole year. The best possible news, and the stock fell about 4%. Micron fell 8%. All of this on a day the broad market hit a new all-time high, with Apple at a record. So the market is euphoric and nervous at the very same time. And understanding why is most of today's brief. Let's get into it. Here's the board. Stocks rose across the board on cooler June inflation. The S&P closed up about 0.4% near 7,572, the Nasdaq up 0.6, the Dow up 0.3, and Apple hit a fresh all-time high. Volatility fell 5%, and yet look at the commodities. Brent crude sits near $85, a 4-week high, up about 12% since Friday, after fresh United States strikes on Iran. Now watch the one number that tells you how to read that. Gold fell. On a war headline, gold fell. That only makes sense if the market is treating this oil spike as inflationary, as more reason for the Federal Reserve to stay hawkish, not as a reason to run for safety. Bitcoin is soft near 64,200, down about 1%, and Ethereum near 1,920, though Ethereum keeps outrunning Bitcoin purely on exchange-traded fund inflows. Hold that gold fell detail, it comes back. Now the signature segment, consensus versus the read. First, and this is today's deep dive, everyone still treats artificial intelligence chips as a one-way bet. Demand is endless, so buy every dip, but demand was never this week's problem. Taiwan Semiconductor just raised its guidance. The stock fell anyway for two reasons that have nothing to do with demand. One, cost. They lifted their spending on new factories by about 15%. And free cash flow fell roughly 17.5% from the prior quarter. The market asked, what does all this growth actually earn? 2. Competition. Micron did not fall because of Taiwan Semiconductor. It fell because a Chinese company, CXMT, just became the fourth largest memory maker in the world, and Apple is reportedly testing its chips. Memory is a commodity, and a cheap new rival is exactly what breaks a commodity business. So the sector stopped rising on good demand news and started falling on cost and competition news. That is a later, more fragile inning. High conviction, and Frankie breaks the whole thing down in today's focus. Second read, the most shared crypto argument today was simple and confident. Artificial intelligence won't protect you from inflation, but Bitcoin will. It's a great line, tested against this exact week. Oil is up 12% since Friday. That is a live inflation impulse, arriving in real time. And on that news, both Bitcoin and gold, the classic inflation hedge, fell. The thing that's supposed to catch you when inflation shows up declined on the very day inflation fears spiked. Now, Bitcoin as a decade-long store of value is a genuine thesis, and we're not mocking it. But a hedge you have to defend on a 10-year chart is not the hedge that helps you the week the fire actually starts. Own Bitcoin for what it is, a scarce, liquid risk asset with a real adoption curve, not for property the price keeps declining to demonstrate. Medium-high conviction. Third read, the Iran strike brought back the $200 oil headlines and the fear that the Strait of Hormuz is closing. The escalation is real. Fresh strikes, a 4-week high in crude, and Iran now dangling a second choke point, the Bab el-Mandeb gateway to the Red Sea, through the Houthis, if its power grid is hit. We take that seriously. But look at where oil actually is. Brent near $85. Analysts price a genuine closure of the strait at $130 to $140 a barrel. 85 is the market pricing a contested strait that is still flowing, which is exactly what it is. So the asymmetry is in the tails. A true closure is not priced, and neither is a durable piece. The line to watch is Brent above 86. That's where the disinflation trade has to be repriced in earnest. High conviction. Follow the money. The regime question this week is not, is inflation beaten? It is which of two opposite forces wins. On one side, genuinely cooling core inflation. June's consumer price index came in soft, and that is what drove Tuesday's rally, Apple's record, and the drop in volatility. On the other side, a rising energy impulse. Fresh strikes on Iran, Brent at a 4-week high, oil 12% above Friday. Bond market leaned into the cooling story, and the 10-year yield eased to 4.5%. The oil tape leaned the other way. And gold, as we said, refereed and sided with oil. It fell because a supply-driven oil spike reads as more Federal Reserve hawkishness, not less. Underneath all of that, the structural money is moving in three directions at once. Into mega-cap artificial intelligence, Apple, Microsoft, Amazon, Alphabet, all up around 3 to 4%. Out of artificial intelligence hardware, memory especially, and Taiwan Semiconductor on the day, despite the beat. And into crypto plumbing regardless of token price. Ethereum outrunning Bitcoin on fund inflows, Visa planning stablecoin rails for tiny artificial intelligence agent payments, and Japan's $250 billion SBI Group tokenizing Japanese stocks with Ondo. The rails are being laid by the incumbents, which is the part that survives whatever Congress does. One more macro item, because it is market moving and it goes live in days. The administration is imposing a 25% tariff on most Brazilian imports, effective July 22nd, under Section 301. There are exemptions: beef, orange juice, aircraft and energy, and a further 12.5% forced labor duty is under review, with a decision expected next week. What makes this one unusual is the motive. It is aimed at a political grievance, not a classic trade dispute. So the question worth pricing is whether a tariff used as a political tool sets a precedent. For now, watch the Brazil Exchange-Traded Fund, ticker EWZ, and the coffee, orange juice, and steel supply chains. Our read is that this stays a contained, single-name event rather than the opening move of a broader trade war, and we've put that on the scorecard as a dated call. A word on sentiment and positioning, because it is the mirror image of the data. Our market and social sentiment monitoring shows the commentary overwhelmingly read this week as good news, full stop. Cooler inflation, new highs, buy everything and Bitcoin will protect you from whatever's left. What that celebration skipped is telling. Almost none of it noticed that on the same day, both Bitcoin and gold fell as oil spiked. Almost none of it noticed that the memory sell-off was a China competition story, not a demand story. And almost none of it noticed that the cleanest demand signal in technology, Taiwan Semiconductor, just got sold on its best quarter ever. The crowd is positioned for a clean, simple, risk-on story. The tape underneath is quietly more complicated. When positioning is that one-sided and the details cut the other way, the details usually win eventually. Here's the tell, the single most revealing data point of the day. Taiwan Semiconductor is the closest thing we have to a pure read on artificial intelligence demand, and it delivered the best version of the story, a record quarter with guidance raised above 40%. The textbook reaction is a pop. The tape gave it a 4% drop, because the company also raised its capital spending about 15%, and free cash flow fell roughly 17.5%. The markets read, this boom is getting more expensive to serve. Alongside it, Micron fell 8% on a completely separate fear, China's CXMT emerging as the world's fourth largest memory maker. When the cleanest demand signal in the sector prints its best number and the stocks fall on cost and competition, you are watching a bull market change the question it's asking. From is the demand real to who keeps the profit? That shift, not the Iran headline flashing over it, is the most important thing that happened this week. Sectors in play, three of them. First, semiconductors and the split we just described. The scale leaders, Taiwan Semiconductor and Nvidia, have a technology lead and the balance sheet to absorb higher costs and outrun a new rival. The commodity players, the memory makers, do not. Micron trades around 7 times forward earnings, sitting on roughly $100 billion of multi-year contracts. That's cheap if the moat holds, and a value trap if CXMT proves it doesn't. That is the disagreement worth watching. Second, energy and shipping, the swing risk. Fresh strikes, a 4-week oil high and a second choke point now on the table. Contested but flowing is priced, a real closure is not. Brent above 86 is the trigger. Third, crypto rails, structurally bullish and price agnostic. Visa stablecoin micropayments, SBI, and Ondo tokenizing Japanese equities. Fresh stablecoin mints on the flow monitors. The plumbing gets laid whether or not the Clarity Act passes. On the radar, 6 things worth your attention. Now and ongoing, Brent crude against $86, the line where the oil spike forces a full inflation repricing. This week, more chip earnings, Netflix and others, and the question of whether the memory sell-off spreads across the artificial intelligence hardware complex or stays contained. The week of July 20th or 27th, a possible floor vote on the Clarity Act. It needs 60 votes, which means democratic buy-in. And passage is far from certain even though the schedule is real. July 22nd, the Brazil tariff goes live, with the forced labor decision due next week. Around August 12th, July's inflation report, the falsification test for the idea that June's disinflation was rented from cheap oil that has already reversed. And ongoing, any signal on the Federal Reserve Chair transition that Ray Dalio addressed publicly this week. A governance question that matters more than a single inflation print. The scorecard, where we grade the dated calls, including the ones that go against us. 3 new calls go on the record today. 1. The artificial intelligence hardware complex bifurcates, it does not collapse. Over the next month, the scale leaders, Taiwan Semiconductor and Nvidia, hold or recover, while memory, Micron and SK Hynix underperforms the group. That call is falsified if they all break down together, which would be a real demand crack. Or if memory rips straight back to its June highs, which would mean the China fear was noise. 2. The Taiwan semiconductor drop was a cost and returns concern, not a demand signal. Its next reported wafer volumes and capital spending come in flat to up, falsified if they come in down. 3. The Brazil tariff stays a contained, single-name event. By mid-August, it has not triggered broad reciprocal tariffs from other major partners. Now the carry-forwards. Our call from yesterday that June's disinflation was rented and reverses is tracking and grades around August 12th. Our call that Brent does not sustainably hold above $80 is under pressure at 85 and may go red. And our call that cool inflation does not buy a July rate cut is tracking well. A hold on July 28th and 29th is now the base case. The close, the most expensive habit in markets is not buying the top or selling the bottom. It is mistaking a price move for the news that caused it. This week the news was loud, a strike, an oil spike, a fresh record high. And underneath all of it, quietly, the single best earnings print in the artificial intelligence supply chain got sold. That's the one to sit with. When good news stops working, the market is not telling you the story is over. It's telling you the story is already priced and asking, for the first time in a while, what it is actually worth. So watch whether the chips that power the artificial intelligence trade keep falling while the companies using them make new highs. That gap is the whole question. Today's focus goes deep on it. The asymmetric signal. One contrarian read a day. Subscribe.